India has clearly ended up coming out of COVID as a strong country. Macro resilience has been very strong. Debt to GDP in India is the same as it was before GFC, whereas globally it would have doubled at least, with little to show for that debt. And so the macro stability along with corporate stability and under-penetration, we think will continue to drive India forward for the next decade or so. So what we have seen in 2023, a couple of things. One is India is more attractive to most investors who are looking at India. We are seeing the PE market grow pretty substantially as companies need capital for growth, or even in certain cases, succession issues drive entrepreneurs to say, hey, I need to professionalize, maybe I bring in private equity as a change agent, maybe I sell out completely. So 20 years ago, what used to be a very difficult discussion for entrepreneurs to part with their equity is not the case anymore.
Times are changing.
Times are changing there. On the investing side, the domestic investor has started really getting used to investing in equity. You can see that in the SIPs, but also in alternatives. So increasingly, you're seeing family offices investing in venture funds, private equity funds. We get asked a lot saying, would you ever raise money in the domestic market or not? And I think all that is very good for the deepening of the market. It is also an exit avenue for us eventually. On the global side, I think the global funds are actively looking at India, partly because some of the other emerging market areas may not be as attractive. And they have raised money for Asia, for example.
That's right.
India may have been a smaller percent earlier, now it becomes a larger percent. So there's a lot more focus on India, which does drive up valuation, and you have to contend with that. At the end LP base, the ultimate institutional capital, people have actually taken the lesson that it's better to be in their home country rather than in emerging markets. Because whether it's China, what happened in Russia, Ukraine, there have been enough instances to kind of show them that they may be better off back in the US. And so they are
stick
not,
to the home turf.
They are still sticking to that home base theory. A lot of Asia-based LPs are probably warming up to India sooner. And my guess is next year, you'll see the Western LPs also start looking seriously at India PE.
Well, that's great. Good to know. On that optimistic note, what are some of the key deal trends that you foresee from the Indian private equity universe? What are some of the factors that will drive private equity deal activity going ahead? The last few years, as we're all aware, we have seen a whole host of deals being signed by PEs, some really big checks, right? Strategics had taken a backseat of sorts. Of late, of course, you can say that perhaps strategics with cleaner balance sheets are making a bit of a comeback, giving some sort of a competition to the PEs that were ruling the roost. Some of the deals are Godrej Raymond, Dabur Badshah Masala. You also have Sheela Karlon, just a few of them in recent times. What are some of the key trends that you think will pan out in the coming months?
For the private equity market.
For the private equity market.
Yeah. So, first of all, finance is very cyclical. Private equity is a cyclical industry as well. So we like to look at it in, say, 5-year averages. If you look at the last 5 years, Indian private equity and venture deals would have totaled about $45 million annually, right? That's a big number. If you look back 20 years ago, it would have been closer to 10 billion, right? So it has grown. But at the same time, we have a lot of other structural forces that we think can propel it even further. What are those? One is India itself is a high GDP growth country and it needs capital for growth. So it's going to attract more capital. Two is, if you just think about the stake sales that are happening, I talked about it. People who are willing to sell 5-10% stake are willing to sell larger stakes. The private equity penetration is expected to go up meaningfully as well. So you've got an extra kicker on top of that. If you just look at GDP, PE to GDP, just the penetration, it's just a rudimentary metric. But India used to be, if you look at the last decade, less than 1% of GDP, the PE investment over GDP. And today it's just about crossed 1%. In the US, it's 3%. So you have a lot of potential for that 45 billion annual number to grow multifold over the next decade. We believe that is happening. We are also seeing a bigger trend towards larger stakes and control deals. And that expands not just the need for capital, but it also expands the need for value-added capital. You're going to play a much larger role in the company. You're going to play a role helping the company get to a certain point. In many situations, entrepreneurs also realize they've taken the company up to a certain level. Can they bring on a value-added partner who can help them go from the next level. And I think that makes it very interesting for someone like us, because then you're valued not just for the capital you bring, but the know-how, the value add that you can bring to the table on top.